Welcome to Revere Asset Management's Your Money with Danny Stewart.
The market will always overshoot to the downside and to the upside.
And Don Vandenbord.
Because it's not how much you make in the markets, it's how much of that you can keep.
Hear ye, gather around and you will hear of the midnight ride of Paul Revere, warning investors both far and near of when the next bear market is near. Folks, welcome to Revere Asset Management's Your Money radio podcast, where we're your fiduciary advisor and we don't push products, hawk annuities, or any of that trash. We're not a broker and we're not an insurance salesman. And we named our company Revere because we love this country. And I had this crazy idea about a month ago, much crazier than most of my ideas, and therefore I decided I had to do it. If it was that crazy, we got to run with it. And I thought, why not use American heroes and use AI to generate these little poems and kind of use their poems, but skew them toward an investment slant, right? So my first one a month ago was MLK's I Have a Dream, I Have an Investment Dream. And then we did Honest Abe, 4 stocks and 7 sectors ago. And then Paul Revere's The Bear Markets are coming. And so now, without further ado, I give me Investment Liberty or Give Me Risk by Patrick Henry. And by the way, AI actually, when I put this in there, they actually attributed this to Thomas Paine, one of them. So AI isn't quite ready for prime time just yet. It still does a lot of really good things, but you still got to double check the work. You need some eyes on it. Anyway, in the spirit of Patrick Henry's revolutionary fervor and investment theme poem, I give you his take on his old poem, Give Me Liberty or Give Me Death. This poem captures the essence of bold risk-taking. All right, you ready? Give me liberty. In the market's tumulus sea, where fortunes rise and fall with glee, I stand resolute and bold, for wealth untold and stories retold. Give me profits or give me loss. No longer shall I die, tossed. The charts and graphs, my battleground. In numbers dance, my fate is found. Shall I bow to fear's icy breath, or charge forth, risking financial death? For in this quest of financial might, with courage firm, and I seek returns that soar to flight. With courage firm and vision clear, I face each trade without a tear. For liberty and wealth I strive, or let my investments not survive. That was one iteration. Now here's another one. In the market's tumultuous sea, where fortunes rise and fall, I stand with courage, bold and free, to heed the investment call. No chains of debt shall bind my dreams, nor fear of loss restrain. For wealth is more than what it seems, a path through risk and gain. Shall I retreat to safer shores, where growth is slow and slight, or ventures forth where profit roars, and seize the chance to fight? The choice is clear, my heart's resolve, to risk it all for more. For in this quest I shall evolve, a wealth of wisdom in store. So let the market's wind blow fierce, let the bulls and bears contend. Give me wealth or give me risk to triumph in the end. Folks, those were 2 different poems by Patrick Henry. All right. Now, I like the other ones a little better because this.
What do you mean by Patrick Henry? He didn't write those. Those are by AI, inspired by. Patrick Henry.
Inspired by AI, but it was on his theme, right? The only thing I don't quite like about this one is this makes it more sound like it's a flip of a coin, a coin toss. You either lose or win, and if you manage risk right, that doesn't have to be the case. But anyway, you get the picture. And folks, if you guys got an American hero, a great American hero, and they've got a speech and you kind of want to do kind of an investment theme on that, send me an idea and I'll be happy to put it up there if it's good. It's got to be an American hero. I'm a history buff. I love Winston Churchill and a lot of other great heroes across the globe and speeches, but that doesn't count. It's got to be American. All
Yeah,
right.
Dan, I can't wait to see you dressed up as Betsy Ross. That's going to be epic.
Oh, Don. I've got the perfect dress and I look good in my rouge. I'll be there.
I'm
Anyway.
sure you do.
All right. Now I'm going to start the regular meat of the show where we would normally start the show. And so I would actually normally at this point have Zach start and reset the new music, but let's just move on. Okay, folks, I've got a question for you. Do you have a CFP as your advisor? Are CFPs the proverbial couch potato, lazy, slothful, a stoner? Is a CFP the perfect job for lazy, sleeping couch potatoes? Now, this is not CFA versus CFP turf war, although I do think the CFP is far superior. No, seriously. Look, the CFP board did this to themselves, folks. This is their words, or more accurately, their pick, not mine. So, ladies and gentlemen, I give you this is the CFP's marketing for new upcoming CFPs. I give you the CFP couch potato boy. So this is who they're actually marketing to manage your money. Do you want your money managed by this kid? I don't know, man. I mean, this is as bad as Mulvaney and Bud Light. I mean, you got to know your audience. I don't want to. And by the way, the CFPs are coming unglued. Current CFPs are going to the CFP board going, what in the hell are you doing? You're making me look like an idiot. I can't believe me. I can't believe it. Anyway, I've got that article in the show notes. It's classic. It is, and they tried to define it, said, well, it really wasn't for current CFPs or for the clients. This is really for new job hires. Well, the CFPs actually came back and said, don't we want go-getters and people with math and science who would be engineers and doctors? We don't want to attract burrito, and this is what their marketing was. It was to burrito eaters, bubble bath takers, and couch potatoes. Man. Talk about missing the mark on that one. Anyway, there's also another article on top strategies for bond investors. We talked about that very quickly. A couple of the ideas in here, they said it's going to be continued volatility, but you may get a boost from reinvestment. And what they're saying, and this is what I talked about, there's trillions of dollars in that T-bill and chill trade, and as the short-term rates come down and the rates are lower, people are going to look for higher yield, and they'll be looking at dividend stocks, or they'll be looking for longer-term bonds. It says, get invested, extend duration, go further out, think globally. I don't agree with that one. And hold credit. They're saying if you go for high yield or junk bonds, you can get more yield. And right now the spreads are tight. Folks, when credit starts to widen, when high yield or junk bonds start to widen compared to investment grade or treasuries, that means risk is elevated. People are worried about defaults. That means you go to investment grade quality. As long as spreads are tight, you're okay. If they start to widen, that's when you really get in trouble. You don't want to own in high yield when they're widening. You want to start actually buying them when they maxed out and they're starting to contract again. So in any event, protect against inflation tips. Don't do that. They're worthless. They lag. They lag. You will do better with regular bonds. Systematic approach. Okay, I agree with that. Anyway, that's a great article. You can read that. And then Jeremy Siegel. Jeremy Siegel said the Dow could, or the S&P could hit 6,000 by end of 2024. Thanks, Jeremy. That's worthless. Did you tell us what stocks to buy? No. Did you tell us when to sell? No. Did you tell us how to do it? No. Thanks. All right. And Trump vows to end income taxes on Americans living abroad. Folks, that is actually a very good thing. My sister's an Aussie. She finally dropped her American citizenship just this last year. I told her for 20 years she needed to do it because they clobber you. United States is the only place that has double taxation for people living abroad. And lastly, the Social Security, we finally have the final estimate. It is set to be 2.5 for next year. People aren't happy about that, but that is the way it's going to be. All right. So that is the articles and the show notes. I did have the mailbag. Let me find the mailbag very quickly. If I can find it. Where did I put it? Stall for me, guys. Stall for me.
We had one mailbag question that just came to me late I want to address, and I don't have it in front of me, but the question was basically, with the risk of the election coming up, do we make any specific moves? And the answer is, we never try to predict. So first of all, we don't know who's going to win, and then even if we did, we don't know what the reaction's going to be. So we let the charts tell us what to do. We won't be overweight or underweight one way or the other based on an opinion. It will be based on what the charts are telling us to do. We have a balance at risk calculation that we do every day, which means if all of our stops got hit during that day, what would our drawdown be? It's usually no more than 6 to 7%. And that's about where it is now after some nice gains on this rally off of the bottom. So no, we don't take preemptive moves based on the expectation of one outcome or another, because you really don't know how the market's going to react to it, or if the market already baked it in. So that's my contribution to the mailbag this week.
And thanks, Don, for that stall. All right, I've got the mailbag in my fingertips right here. So on 10-9 MB, and he's a client and he's a listener, and he actually sent in this for everybody else because he just did his 2025 Medicare Part D drug plan. It's coming up, and he said there's major changes, 2025 Medicare drug plan Part D, annual deductibles doubling from $290 to $580. The maximum out of pocket will drop from about $5,000 to $2,000. There are significant differences in the cost of drugs among these plans. Do not assume the plan you have for 2024 will be the best plan for you in 2025. Go to Medicare.gov to see the drug plans available in your area. You'll be asked to enter the name of the prescription drugs you currently take. The database will give you an estimated annual prescription cost for each of the plans. Folks, this is practical advice for everyone who's on Medicare. If you have to revisit every year because it changes. This is a huge ongoing annual savings and can be a very important component for people planning on a fixed budget. Folks, if you're in a retirement, things are tight, this is one very good way that can save you hundreds of dollars a year easily. Okay? All right. 10-7 FC. Dan, and this is about the bonds. Remember I told everybody about a couple months ago, they needed to start moving from the money market, a shorter term, to go longer term in bonds. Bonds had already gone up some, longer term bonds, but then they backed up a little bit right after these people kind of got in because the inflation numbers kind of came out a little bit hot again. It's still within range, but it's got a little tight. So it says, Dan, the bond ETFs you recommended aren't working out. I'm sure in the long run they will. Should I just hang on or take losses or cut and run until things improve? I can always go back to SNSXX. That's a Schwab Treasury Money Fund. FC, I'm looking closely, and as an active stock guy, it is hard watching longer-term themes play out. I'm going to monitor early next week and see if they hold. If they do not, I intend to sell and look for a better entry. SNSXX, Treasury Money Market, will be under 4.5 shortly and heading toward 4. This should also give support to long-term bonds because if you don't own before they drop, it just gaps down. You're going to miss the gain part. You do not get the gains or lock in the higher rates. Rates will already have gone down. Okay, I'll hang on to the bonds for another week, see what they do. This is on 10-10. This is the next day, this is yesterday. We are going to sell EDV. That's the Treasury strips. That's the long-term Treasury strips that are the most volatile. They have the longest duration. I said today, which is the most sensitive to duration, AKA longest maturity, sort of. The other two have much higher yields and are far less sensitive. We are holding for now. He said, thanks for the info. So, folks, I just took on, and that was only 10 to 20% of their portfolio. It's a shorter part, and it's going for the capital gains, not for the yield. So we trimmed some back, and then we're going to look at possibly re-entering. So those were the two mailbags, folks. And by the way, if you've got a stock or a topic you want discussed, just send an email or just Dan at Revere Asset. There's a contact button up on our website, and you can send me your question anytime you want. We're fully transparent, and we tell you when we're right, and we even tell you when we're wrong. How many investors tell you when you're wrong? They're wrong. At Revere, we always say it's okay to be wrong. It's not okay to stay wrong. Now, with that, without further ado, we're going to go straight to the stock nerds. We're going to go straight to Don and the team, and we're going to find out what the markets are telling us. Are the markets setting up to move higher? Everybody's scared because we're at all-time highs, but the market keeps going higher. If you're not scared, you don't understand the deal. So how can I stay invested while I'm scared so that I don't give up gains? Remember, there's a very famous quote: more losses have been given up by trying to avoid the next bear market than the bear market itself. In other words, people kept assuming the bear market, so they just sold out because they got their fear took over, and then the market kept going up and up and up and up, and there was a 20% correction, but it was from 50% higher. So they gave up 30%. Anyway, just a thought. So how do you manage that? Because we're not pie charts or us. We're not you're not going to get a mutual fund pie charts or us here at Revere with some dumb arbitrary date to rebalance. Sometimes that's picking the flowers to water the weeds. Folks, you got to have a reason to sell and you got to have a reason to buy based on that particular security. So with that, Don, I set the table nicely for you. Take it away and tell us about the markets and what we're doing in our portfolios.
Well, I want to thank the guys for covering for me over the last few days while we played Dodge the Hurricane here in North Florida. They got hit hard on the Gulf Coast down the southern part of Florida. The worst case scenario for us would have been some flooding and some wind damage, but we dodged most of that. And thanks to everybody that wished us safety. Connor's down in Fort Lauderdale, and our disaster recovery plan, Ted, is up safely tucked away in his
Virginia.
parents' house, right?
Yeah,
Virginia. So
yeah, we flew him up. So, folks, he was actually going to go visit his folks this next week, and we said, Ted, just go early. That way, if this hurricane does take out the entire state of Florida, we've got backup. Now, I can always trade and stuff if I have to in Dallas, but we wanted to have different points. That way, if Florida went down, we're still operational. So we had geographic redundancy, Don.
Yeah, so he got on his colonial steed and with lantern in hand rode up 95 on a horse.
Oh, that's classic. Don, we need to get you on a horse on a lantern on what's that highway that goes right down the beach all the way north and south?
A1A.
A1A, yep.
Yeah.
Yep. Well, I know that that highway very well.
All right, let's get to the markets here, and let's go to a 60-minute chart on the S&P 500. So after the last breakout, we had spoken for a while about how we needed to hold this bottom level above this 5,600 level, but we stopped testing that, which is good. That meant the market was making a higher low. And then over the prior 14 days, we were focused on how are we going to resolve in this tight consolidation between 5670-ish to 5767. And we broke out on Wednesday. And the good thing is that there have been several attempts by the market to break back down into that range. And this is just technical analysis 101. What was resistance when it's broken should flip to support. Otherwise, you're talking about a failed breakout. But this is playing out perfectly. On Wednesday, we broke above the resistance. Made a higher high on Wednesday, challenged that both to the upside and the downside on Thursday, but didn't break either way, and now breaking above it on Friday. It's 11:03 Eastern time. You can see the bar here of us clearly breaking above that level, and we're not far enough away from this to stop looking at this, so we're still keying in on this 57, 67-ish level as support for any pullback. But as of now, we've broken above round number resistance at 5,800 on the S&P, and we continue to ride this bull wave as we've been talking about in our videos since this shakeout below the 50-day moving average back at the beginning of September. So we're not going to try to pick a top. We never try to pick bottoms either. We just go with what the market's telling us. And the best part about this is when we, on our trend gauge every night, we have 4 arrows. It's 3 dedicated to the major indexes and how they are trending above their moving averages. And then the fourth one is leading stocks, and leading stocks have really been outperforming the averages. So we're getting some nice returns in the ponds that we fish in for leading names. And we've been detailing what we own every night. Most transparent advisor in the country, tell you what we buy, what we sell, when we're right, when we're wrong. And
so right now we're like the
appreciate
Beach
everybody
Boys. We're
supporting
just
us.
catching a wave, right? We're just catching a wave and
Catching
riding
a wave.
it, and then we'll
Yeah.
have a sell discipline. All right.
Right. Yeah, and just take it level by level. And for now, we consolidated for 14 days. On the 15th day, we made a higher high. So now this is the latest level that we're been in. We continue to raise our stops, and the floor for clients is at an all-time high as well. Because as you raise your stops, that locks in those gains. So any pullbacks in either the individual names that we own, if our stop gets hit, or if we start breaking on the indexes, we have stops at multiple levels there too, but the floor raised in all of our portfolios. So the floor and the ceiling both at all-time highs.
Yep, that's awesome.
So let's go to the fellas. We're going to start off with Connor here, an ETF he brought to our attention this week that we're keeping an eye on. A Cathie Wood ETF, but not the very well-known ARKK. This one is ARKF. Tell us about it, Connor.
Yeah, so I stumbled across this, and ARKK is, like Don mentioned, everyone knows that, and it's just massively underperformed for quite some time. But I saw ARKF and just a much better chart, and what I liked about this is based on just, first of all, just from a chart perspective, it's got a really clean flat base that it broke out of and is falling through to the upside right now. And it's pretty near 52-week highs. You have that RS line trending in the right direction. And if you go to the weekly down as well, this actually bottomed, a couple months back. And to me, this looks like a pretty textbook stage 2 uptrend. And you see now that after that big move up earlier this year, it's looking to break out of that, secondary flat base in this run. So that chart initially caught my eye, and then I wanted to dig a little deeper and look at some of the stocks in the ETF. So if you pull up a chart of Hood, this is Robinhood. And one thing, a lot of these fintech stocks as a theme, they've been pretty nice. You have Upstart that's been working, Affirm's been strong, and then Hood actually just broke out of this flat base into new highs earlier this week. It's falling through the upside. So that's the type of environment that we're in right now, is seeing breakouts work and they fall through. And that especially suits our style the best. And this is a holding in there. The chart looks great. We've been talking about this name for a while, but it's just been consolidating. But, Robinhood has they have the crypto angle. They also just have more retail people getting into the market. And it's for someone new that's opening up an account, Robinhood's usually the first where they go. So they get a lot of customers that way. And then another stock is Toast, TOST. This is another one in the ETF. This is a payment processor. If you go out to eat, I'm sure you transacted with one of these before. And this is still, it just needs volume to break out of this base, but it's actually pulling back to the standard pivot point and putting in a nice reversal off the 21-day. So that could be a good low-risk entry with the stop at the 21-day or 2% below, give or take. So that one looks good. And then the third one, this is more of like a bottoming base, but SQ and Square also has that Bitcoin angle as well. And that tried to break above the 200-day yesterday, and it did. Now it's pulling back, but again, it has that similar flat base look, and these are in pretty good position if the market starts to rotate into these type of names, and definitely does have some upside. And you can see that relative strength lines trying to break out of a pretty big declining tops trend line. So, some of the standard growth stocks are a bit extended here. So I thought this was an interesting sector and list of stocks that, could start to see some more rotation. And especially with the 50 basis points rate cut fintech is a sector that you expect to do pretty well.
Yeah, I brought up ARKK too to compare that to ARKF. ARKF certainly leading from that standpoint, and fintech clearly has money flowing into it. Thanks a bunch, Connor. Let's take it over to Ted. And Ted's going to start off with what was the leader of the last leg up in the bull market, NVIDIA, and how it's looking now.
Yep. So I've definitely talked about this quite a bit on the last few podcasts and in the daily videos and the weekend videos. But the reason why I'm emphasizing it is because what Don said. It is the leader and the most consequential company in the last bull run. And recently, some banks have met with NVIDIA and they said that their runway is actually more than or longer than expected from prior. So clearly that's showing up in the chart. It broke that down trend line. If you can draw that in, Don. And so that was a first buy area. Afterwards, we crossed this 130 area, which could have been an ad. It was a tad bit extended, but now we're coming up to this 136 area. And these are all levels I've highlighted even weeks ago on the podcast, and re-emphasized them on the daily videos and weekend videos. So I wanted to just walk the listeners through the evolution of this trade so far, because this is precisely how I like to build into position when a stock rounds its bottom in a base, and then you start building in on the right side through various pivot points. So this next one, like I talked about, 136, it's a little bit wedgy into this level. So my ideal situation is it pulls back a bit, uh, some downward drift, shake out some weak holders and late chasers, and then take out that 136 level. So that is key. Um, some banks and analysts said that their Blackwell chips are potentially going to be sold out for the next 12 months. AI companies are spending a lot of money increasing their capital expenditures on these Blackwell chips, because what we had before was the Hopper 100s, and they were used for training the AI models. And now the next step in AI is inference. And so the Blackwell chips will be crucial for inference in AI models, which is one leg up, because training is just getting all the data and feeding it to the AI for it to learn. And the inference is for the AI to be able to take that data and actually make reasoning and judgments off that data. So that's the next level up for AI. And then can you go up to MSTR, which we also own in Grotection? This actually just made a new all-time high and continues to decouple from Bitcoin. And we've definitely brought that up and raised some question marks on why it's this strong relative to Bitcoin when Bitcoin is at the 50-day and not even close to all-time highs. There is one theory that came up that I read about, and it was that their debt service costs for the debt that they took on to buy Bitcoin is actually decreasing. And I think they're actually going to cover it soon and then issue even more debt to buy more Bitcoin. So I think that is one potential thesis to why MSTR is in all-time highs while Bitcoin is not. And this is just amazing so far. It took out that 200 Livermore level and has pushed away, and it's currently trading at $206. And yeah, if Bitcoin, especially if Bitcoin gets into gear, I mean, you would expect much higher prices in this name. And so finally, Tesla, which was a trade I was in too. We've talked about the 235 level where it broke out, filled its gap to 245, and then found resistance at 260. That is exactly what happened at 260. And then there's a catalyst to the downside when they had lower than expected deliveries. And this recent gap down was a sell the news event on yesterday's Robotaxi event. And Elon Musk stated that they expect mass production in 2027. But we all know Elon, he's more optimistic than pessimistic. So that's probably actually like 2028 or 2029. The analysts criticized some of the Robotaxi features, and they thought it was a rushed event. And so disappointing reaction from the markets. Clearly, they were not too impressed with the event so far. On the flip side, connected with Tesla, is that Uber gapped up into all-time highs. We also own this at Grotection, which is nice. We have a 4% position there. That's definitely adding on to our performance today. And clean break of all-time highs. First 5 minutes, it pulled back, retested it, and now it's trading at highs of the day. Don just highlighted on the chart, huge volume. So you could have treated this kind of like a catalyst play, news catalyst or story play, because Uber, cited by many banks today actually, that they are the leader in distributing autonomous vehicles. And they are partnered with Google's Waymo, and Waymo actually has vehicles on the road right now in California, in some other cities, making about 100,000 paid drives per week. So that is actually real, unlike Tesla's Robotaxi so far. And so those are three names, evolutions of three trades. Two are currently winners in Grotection and the clients that I manage. Tesla in Grotection, we also stopped out. Same with myself. But Uber, on the flip side, is receiving positive attention because of Tesla's disappointment. And we're participating in that as well. So just some leaders we are in and showcasing the evolution of the trade.
Great stuff, Ted. I'll go through the whole portfolio in tonight's Friday video. And again, appreciate you guys covering for me this week. Dan, that's it from the technical analysis side. You can wrap it up.
Yeah, I just wanted to make one follow-up comment. When the CEO of NVIDIA, he's talking about how the demand for his words insane. The demand for the chips are insane, folks. They're back ordered. They're back ordered over a year. Here's the other thing: CEOs like Elon Musk, Tesla, they're actually trying to have private meetings with the CEO of NVIDIA, and they're begging to buy as many chips as they can. They're trying to get. People and companies are fighting over these chips. That's how strong the demand is. So when you've got demand that strong, it really reduces your risk. They are the type of technology to have right now. They are it. Anyway, folks, listen, if you like what you heard, please tell a friend, tell a neighbor, just send them to revereasset.com. Up in the right-hand corner, there's a subscribe button. They can just put in their name and email. We're not going to spam them or bug them. And this podcast will go right into their inbox on Saturday morning. And every night the market is open, we do a daily market tomorrow. It's called Tomorrow's Insights. We do a market video saying what the probabilities and what's setting up the market strength and weakness, short-term, long-term, and mid-term, and what we are actually doing in our own portfolios. We're the most transparent advisor I'm aware of out there. Now, if you go to YouTube and you just search for Revere Asset, just Revere Asset, and hit subscribe, Zach's going to have this podcast out in about an hour. What time is it? It is 10:17 Central Time, so it'll be out by about noon or even 1 Eastern. You'll have it a couple hours before the Friday close. That's what our stock nerds do because they get it earlier. So there's all types of ways you can get our content. And right next to that's a Contact Us button. It'll send me an email. You can ask for a complimentary portfolio review or a topic, and you can always just send me an email, dan@revereasset.com. Folks, you can also call us old school at 855 Real Wealth. We'll talk to you next week on Your Money, not their money, your money.
Because it's not how much you make in the markets, it's how much of that you can keep.